now, for our next sacred cow, one of our favorite ones, live below your means. How many of you here do not like living below your means? No. That's no fun. It kills people's spirits. Now, why would you want to live below your means? But many people have to, unfortunately, because the Fed is printing so much money that taxes and inflation go up, which means people are forced to live below their means.
Perhaps you've heard this saying before: to be rich, you have to live below your means. This essentially means spending less money than you earn each month. On the surface, this makes sense. Take, for instance, as an individual, you only have 24 hours in a day to work, so there's a limit to how much you can work. Therefore, there's a limit to your income. So in that situation, you're forced to live below your means. At least, that's the common way forward. Well, according to Robert Kiyosaki, the idea of living below your means is a scam. Rather, you should expand your means. So how do you do that? In this video, I'll reveal how you can raise your means so it can help you live your dream life. Following these principles myself has given me the financial liberty I was once looking for. Now let's get started. Acquire cash flow assets.
The point here is this: there's assets and liabilities. The way you increase your means is acquire more assets. Not houses, not cars, but assets.
According to Robert Kiyosaki, investing in an asset is the key to financial freedom, but not just any asset. His simple but powerful definition of an asset is something that puts money in your pocket whether you work or not. For example, a rental property that generates rental income is an asset. At the same time, a car loan or a credit card debt that requires monthly payments is a liability. Even your house is a liability because you need to maintain it, so it takes money out of your pocket. This distinction is critical. An asset generates cash flow, while a liability incurs expenses. To expand your living means, the goal should be to accumulate assets that cover your monthly expenses so you don't have to work for money. Instead, your assets work for you. In Kiyosaki's view, the ideal asset is like the fabled goose that lays golden eggs. It's about acquiring wealth and finding assets that continuously produce it. He breaks these types of assets into 4 categories. One of them is rental real estate. He sees rental properties as generating relatively steady and predictable monthly cash flow. This is because real estate tends to appreciate steadily, and rents rise with inflation over time, making real estate a wise long-term asset. In addition to real estate, there is dividend stock. You can extend your means of living by choosing companies with proven, stable long-term businesses that regularly pay increasing dividends over time. Commodities like gold are also good examples of cash flow assets. One of the main reasons why Kiyosaki encourages individuals to invest in gold is that it protects against inflation and financial instability. Gold has held its value throughout history, making it a haven in economic uncertainty. Looking at this graph, you can see the history of gold prices over the years. However, deciding which asset class to invest in depends on your understanding and preference. For instance, Kiyosaki prefers real estate over the stock market because it's his expertise. Educate yourself financially.
So those are the 4 main reasons E's and S's, as a general rule, have to live below their means. But if you have financial education and live on the B and the I side, you can increase your means by increasing assets.
Knowledge is power, and this is particularly true in finance. But why should we care about financial education? Imagine you're in a fancy restaurant, deciding between a classic cheeseburger and a barbecue pulled pork sandwich. You might know what the ingredients are, but without knowing how they're cooked and what they taste like, it's hard to make an informed choice, right? That's where financial education comes in. It helps us grasp not only the what, but also the why and how of managing our money. This way, we can make wiser decisions and avoid costly mistakes, such as falling for a get-rich-quick scheme or taking on excessive debt. Many people hesitate to invest due to fear of loss, attributing high risk to investing. However, Kiyosaki believes that it's not investing that's risky, but rather the uneducated investor. Education is paramount before diving into investments. According to Kiyosaki, Many people struggle financially because they lack financial education. You may be a good doctor, a lawyer, an accountant, or a rock star. Still, suppose you don't have a good knowledge of the difference between assets and liabilities. In that case, you will keep buying liabilities, thinking they're assets. And this will, in turn, affect your standard of living. Kiyosaki encourages individuals to invest time in understanding the financial markets, real estate, and other potential investment vehicles. The more educated you are, the better your investment decisions will be, and the more likely you'll be to build assets rather than accumulate liabilities. He argues that our educational system doesn't teach us about money and finance, which leaves many people financially illiterate. Educating yourself about investing, taxes, and other financial concepts is essential to build wealth. Change your mindset about money.
Yeah,
So
the
it
worst thing
creates
is they
guilt.
cut back on their expenses and they save money, right, Mike? That's the worst thing they could do.
Right. Depreciating money.
It all goes back to the questions you ask. I mean, when you say, I can't afford it, I don't have the money for that, a better question would be, how can I afford it? How can I get the money for that? Expands your mind.
One of the most important things you can do to stop living below your means is to change your mindset about money. If you're constantly thinking about what you can't afford, it's easy to get trapped in a cycle of financial scarcity. Instead, try to focus on what you can do to improve your financial situation. One of the fundamental changes in mindset that Kiyosaki advocates to achieve is shifting from the employee mindset to the investor mindset. The employee mindset is focused on job security, a steady paycheck, and working for someone else. The investor mindset, on the other hand, is focused on creating passive income streams and building wealth through assets. For instance, the mindset of the rich when it comes to money is highly different from that of the poor. They understand that new money rules exist and the old ones no longer work. So where the poor think that to be rich, they have to live below their means to save, the rich have a money mindset and know that savers are losers and that the magnitude of your wealth is relative to the velocity of your money. Where the poor think their house is an asset, the rich know that your house is not an asset. Where the poor think you need a good education to be rich, the rich know that financial education is much more important. Instead of thinking of money as something to spend, consider it a tool to build wealth. Take calculated risks.
Well, and a lot of it comes from fear too. I think people are afraid of their futures. They're not sure where the futures are gonna lead them. So they think, well, I'll live below my means.
Taking calculated risks is another way to increase your cash flow. Kiyosaki explains that many people fear risks because they fear failure or losing money. However, he argues that taking calculated risks is necessary for financial success. Taking risks allows you to explore new opportunities, learn from mistakes, and grow wealth. Examples of calculated risks can include investing in stocks, starting a business, or purchasing real estate. These are all ventures that involve risk, but with careful planning and evaluation, the risks can be minimized and the potential rewards can be significant. Taking calculated risks also helps in prudent decision-making and makes decisions that most people would otherwise miss. It also helps you maximize the opportunities to create wealth smartly. Highly successful people are not afraid to fail because they know that when they do, they'll learn a lesson and get better. And they say yes, even when doing so might be scary. Let's take the example of a small business owner named James. James has been running a local bakery for several years and business has been steady. While he's been making a decent living, he's feeling stuck and unable to expand his business beyond its current location. He's heard about other bakeries that have seen success by expanding their operations to multiple locations. Still, he's hesitant to take the plunge. He's worried about the financial risk and whether he can manage a larger business. James decides to research and speak to other business owners who have successfully expanded their operations. After talking to several successful entrepreneurs, James realizes that the key to expansion is taking calculated risks. He realizes that he needs to invest some of his profits into marketing and business development rather than just maintaining his current level of success. He plans for a slow and steady expansion, beginning with a second location in a nearby town. James is nervous about the risk but decides to take the plunge. After a year, his second location is thriving, and his overall business has seen a significant increase in revenue. By taking a calculated risk, James has increased his cash flow and created a more sustainable business model. Meanwhile, you shouldn't be reckless with your risk-taking. As it's called calculated risks, you should consider and evaluate them before taking the plunge. Create multiple streams of income. Relying on a single income is risky and can impede you from living your desired life. Kiyosaki encourages the creation of multiple streams of income. This could mean having several types of investments, starting a side business, or buying a property that provides rental income. This diversification helps to insulate you from financial setbacks in one area. Diversifying your income through multiple streams is extremely valuable because if one type of income dries up, you still have other sources of money coming in instead of losing your entire income altogether. Think about it. If your entire income is from an employee job, you're putting yourself at risk. If your company eliminates your job, you have zero income until you find another one. Thus, you have very little control over that stream of income. Getting your income from several sources helps you be less exposed to financial risk. But beyond that, when you have more than one income stream, you're much more likely to create exponentially more income than if you only make money from one source. It gives you much more freedom and control over your financial life than earning income from only one or two sources. That's crucially important in today's economy because the nature of work is changing quickly. Most people only know one option to get more money. That's working hard or harder than they do to get more money. It is bad to think that is the only way to get money. Sure, it is the most common method the middle class uses to get money. But take a look at the rich and upper class. Most of them don't work hard in the way of a job. The top earners in the world are business owners. They let money work for them by creating passive income streams. Think long-term. You should know that building cash flow assets is not a get-rich-quick scheme. It's a long-term strategy. Kiyosaki recommends looking at the big picture rather than seeking immediate gratification. This long-term perspective will help you make prudent financial decisions and build sustainable wealth. He explains that many people try to get rich quickly, often by taking on high-risk investments or starting a business without proper planning. However, these strategies can often lead to failure or financial ruin. Instead, Kiyosaki advocates for starting small and gradually building your wealth over time. He suggests that by taking small steps, such as investing in low-risk assets or starting a small business with minimal capital, you can gradually build your wealth and achieve long-term financial success. Furthermore, Kiyosaki stresses the importance of being patient when pursuing financial success. He acknowledges that building wealth takes time, effort, and discipline, and that setbacks and obstacles will occur. However, by staying patient and persistent, you can gradually build your wealth and achieve your financial goals. Achieving this is all based on changing your mindset from "I can't afford this" to "How will I afford this?" and then working towards affording it. What's your take on these lessons? Let me know in the comments section. If you enjoyed this video, like, share, and subscribe to my channel for more. See you on the next one.